Why don't we start off with Microsoft? Microsoft trading very close to its all-time high. Cloud is often the driver of this company. The estimate is for 34% growth year over year. Is that good enough for investors, especially after Alphabet had much better than expected performance when it came to cloud?
Exactly, and obviously they had a bit of a sales execution earlier. They resolved that last quarter maybe faster than people expected, and I think the market is expecting that further acceleration and strength, and that's going to come from Blackwell supply easing up, and Jensen Huang was talking about 1,000 racks being installed at all the big US hyperscalers per week, and that ramping through the quarter. That should give them the capacity to be able to lean into what is a very strong cloud backlog of demand into the second half and beyond. So we want to see that, and then Amazon also tomorrow in terms of being able to deliver that acceleration that we didn't quite see last quarter.
Put on a Meta. It feels like that Alphabet's a bit of a guidepost for these two earnings. I mean, Alphabet, raising its CapEx forecast quite significantly, well above analysts' expectations. What are you expecting from Meta? They went from the year of efficiency to investing deeply in AI and data centers, and also AI talent, in all fairness. What are you expecting when it comes to CapEx from them, and how does the street react if they make a significant increase in their forecast?
Yeah, well, I don't think you go and spend $15 billion on a quasi-acqui-hire and set up a superintelligence group to then go and cut back on CapEx. So I think there is still an arms race out there. Everyone's competing here, and so no one's going to be pulling back anytime soon. And so I expect to see positive comments around that capital spending going out from here. And that's coming from use cases ramping up. I mean, the other thing we saw from Alphabet last week was the number of tokens they're processing, 980 trillion, and then that's up from 480 trillion just a couple of months ago. So that use case and that CapEx is increasingly going into our usage of this technology and not just training up a bunch of models, which I think is giving them more confidence to lean into this opportunity.
So you're saying it's giving them more confidence to lean into it, but is there a point where it's too much? We've had some guests on where some CEOs, according to the Yale CEO caucus, believe that there's too much hype around AI and there may actually be overinvestment. Then we see some companies like an ASML saying they're not really sure they're going to grow in the coming year. So we're seeing some mixed signals when it comes to this infrastructure story. Is there a number that's just too much? Is there too much growth when it comes to that CapEx spending for either one of these companies?
I think at some point, I'm not sure we're there yet, but I think a couple of things are important when you think about that. We've heard tax reform mentioned earlier in this program. That's going to be a significant benefit to the free cash flow of these companies, which again probably gives them a bit more confidence to be able to, the fact that they can expense up to 100% of CapEx in a year and R&D spending domestically, gives them more free cash flow that they can feed into this capital spending. And also just the competition. You're hearing about Anthropic doing a raise. OpenAI did a raise last quarter. xAI is doing a raise. All of these raises are probably going to go into building more AI infrastructure or renting it off a hyperscaler. Again, that's going to give them more confidence to spend. So these sort of trends aren't linear. At some point, there will be an end to the party, but it seems a bit early in this technology's innovation to be thinking about that.
All right, you seem pretty confident that these companies are going to spend and the investors are going to receive it very well. Are there any weak spots in either one of these reports that you think are flying under the radar that investors need to pay attention to?
I just think given the rebound of the market and expectations and positioning, particularly in, say, a Meta and a Microsoft, which is much stronger, we think about this stock market circle of trust. You've got Tesla and Apple and Alphabet sitting outside of that, but you've got Nvidia and Meta right at the middle, and Microsoft's been pulled into that a bit more after last quarter. That's going to impact the T+1 reaction to these stocks. But we're still ultimately very early on in the innovation curve of this technology, and ultimately the very large addressable markets and new use cases for this technology in years to come. So we had exactly the same debates 20 years ago around the internet, and surely the CapEx will end, and surely this has all got to end. But we're at the start of a generational technology here.